Right now, my expectation until the end of the year is that markets most likely overall will march higher. We had a similar situation back then in 2007. So when they cut rates, the markets continued until early January, making new all-time highs. So wouldn't be surprised if it's going to be a volatile ride higher for the stock markets. Maybe that will also trigger the rally in Bitcoin. And when we talk precious metals, yeah, I mean, gold had broken out above this 2,531 new all-time high from end of August. And I think that we are in a spike scenario that will take gold towards $3,000 in the next few months. And of
Yeah.
course, silver.
Financial analysts expecting markets to rise overall by the end of the year, drawing a comparison to 2007 when rate cuts led to market highs until early January. While volatility may increase, stock markets could trend upward, and this might trigger a rally in Bitcoin as well. For precious metals, gold has broken past previous highs and is on track to potentially reach $3,000 in the coming months, with silver expected $50 to follow. A financial analyst and expert in precious metals, Florian Grummes describes cyclicality is about to turn positive, with some challenges likely until early November. However, there's an election-related issue. Markets should rally into year-end. In gold, after a long cup and handle pattern, gold surged past $2,535 in August. Although a pullback to the $2,150 range was expected, gold has remained strong, hitting new highs after every dip. Florian exposes in August, there is a prediction that instead of a pullback, gold would move directly to the next target, Project Gold, to reach $3,100. Gold rallies typically end with a sharp vertical spike over a few months, which is likely still ahead. Florian expects this spike to occur in the next 3 to 8 months, especially after gold hit $2,600 following the Fed's recent press conference. After this spike, Florian tells gold is likely to drop quickly back to $2,500. This presents strong trading opportunities if profits are taken in time, but waiting too long could result in losses. As it is known, for physical holdings, however, no trading is needed, just hold steady. In trading or mining stocks, caution is necessary, as spikes can reverse sharply. Before we dive into the interview clips, make sure to hit the subscribe button and turn on the notification bell so you never miss our latest updates. Thanks for your support, and enjoy the video.
Here we are. I think seasonality is soon to be turning green. We might have a bit of a challenging few more weeks or into early November, but afterwards, unless there is some disaster around the election, I think the markets will rally into the year end, early January kind of typical pattern. So going back to the last few years, and especially last year in summer, we had this big cup and handle pattern in the gold market, right? Gold had been running against $2,075 again and again. It failed, I think, 3 times. We had the big pullback during 2022 when the Fed started to raise interest rates dramatically. Gold sold off, did a triple low at 16.15. That was the start of that rally that still is ongoing until today. And we consolidated last year over the summer and then finally got that breakout above 2075 in last November, end of November, early December. And that basically brought the end to that huge cup and handle pattern, which gold had been working on for 13 years. And the first target out of that cup and handle pattern was $2,535. I gave that target a year ago, and we reached it beautifully at the 20th of August this year. And of course, the textbook would tell us from there we should see a pullback, testing that former resistance, which has now turned into support around 2000, let's say 2050 to 2150, like a broad range. But as you know, gold is still very strong. It keeps pushing higher. We had a few big down days over the summer, but every time it came back up on its feet, it always keeps creeping higher in the end of the day. It made new all-time high after new all-time high. So I came up in August with my updated scenario, and that was basically probably we don't see that pullback anymore, but we just go directly towards the next target. And if you take the cup and handle again, we have reached the depth of that handle, but now the next target will be the depth of that cup. And if you calculate it more or less, the cup had a depth of, roughly speaking, $1,000. So if you put that on the breakout level at 2075-ish, it will take us to 3,100, let's say, roughly speaking, okay? And that is the next target. And combining that with my experience that in the last 25 years, we haven't seen any gold rally without a final spike where gold basically went up vertically over a few weeks or 2, 3 months. This probably still is missing, and this is now the main scenario that I see for the next, let's say, 3 to 8 months. That means this rally continues. We have seen $2,600 yesterday after the Fed, during the press conference. And I think this super bullish spike scenario is activated, and it will take gold to $3,100 rather quickly over the next few weeks or months. That's my main scenario. Maybe it could take until spring next year. Maybe it could happen faster. Usually, as I said, you have this rally that's building up, and at some point you get this vertical spike. At the end of that vertical spike, gold turns around and comes down back hard. So let's say we started that spike at 2,500, we're going to 3,100, and then it will also come back fast down to 2,500. So it's great for trading, and it's great if you take profits in time. If you wait too long, you might give everything back. So, of course, with your physical holdings, you should not trade that at all. It's just an easy, smooth ride holding your physical metals. But if you are trading, if you do mining stocks, whatever, then you have to be careful that these vertical spike scenarios at the end of the spike end abruptly and then go in the other direction very, very quickly.
Florian highlights clearly since 2001, we are in a secular bull market, with the first leg reaching $1,920. The second leg is likely to push prices much higher, potentially to $5,000 or even $10,000, depending on how much money is printed. Historical examples like the hyperinflation in the Weimar Republic are present, which show that gold prices can soar dramatically in such scenarios. Moreover, Florian also explains next target for silver is $50, marking its third attempt at that level. Trading below its 1980 price, silver shows significant potential. It usually lags behind gold but can surge dramatically during the final stages of a bull run, signaling the rally's end. Florian is bullish on silver, expecting three-digit prices, but reaching $50 might lead to a pullback before another attempt to break through. With the historical gold-silver ratio, silver has room to catch up, often following gold until those last explosive moves. However, smaller mining stocks are gaining traction, showing double-digit increases and increased M&A activity. Florian thinks they're poised for a significant move to catch up to gold, possibly by early spring next year. However, once the sector starts moving, it could advance quickly, leaving little opportunity for investors to enter on pullbacks or dips. This rapid upward momentum poses a risk for those looking to time their investments in mining stocks. Let's get back to the interview.
I think it's very clear that we are in a secular bull market since 2001. The first leg took us to 1920, and now the second leg will take us most likely much higher. I think 5,000 is very likely, maybe 10,000. Who knows? It will all depend on how much money will be printed. Don't forget. I mean, in the German Weimar Republic, during the hyperinflation, the gold price went to a few $1 million, Deutschmark back then, right? So it all depends on how much they expand the money supply, basically. And I think the next move for silver, the next target is $50 for sure. That would be the third time that we reach that number. I think nothing new. Silver is one of the very few commodities that is still trading way below its 1980 kind of price high. So there is a lot of potential, but it's gonna be a weird, crazy move. And usually silver is lagging most 90% of the time, and then suddenly in those last 10% it shows up and like goes completely nuts. And then that's where you get this outperformance against gold, right? So from my experience, it's great if you get the timing right for these last 10% in a bull run and then silver shows up. It also is the warning signal that the bull run in the sector is coming to an end. So, of course, if you hold mining stocks, silver mining stocks for that typical kind of like final run in silver, you can see crazy moves within a very short period of time. But again, it's also a warning signal that the rally in the sector comes to an end. So I'm very bullish. Long term, I'm in the three-digit silver camp for sure. But I would assume that if we reach those $50 now, maybe in the next few months, next year, for the third time, we might see a pullback again. So we've seen $50 in 1980, then in 2011, and now that would be 2024, 2025. would assume right now that once we get to those $50, you get the pullback, maybe back to $30, who knows, maybe just 35. And then silver will need another run up towards the $50. And it will take time, it will have to run a few times against that resistance. And once it finally breaks through, then yeah, I guess three digits, $100, maybe even $250 is possible. We all know that in the ground, you have a gold silver ratio from roughly speaking 9-1 or 10-1. And right now, this ratio is completely trading at a different level. So there is a lot of room for silver to catch up. But again, it more or less follows gold for a long time. And then suddenly at the last 10% of the bull run, it shows up and it's doing its own thing. We are seeing more and more of the smaller stocks picking up. You see double-digit gains here and there. You see more M&A activity in the sector. And I think it's time now for the mining stocks. I think they're getting ready now for a really nice move to catch up to gold. I cannot tell you exactly how fast it will happen, but usually, yeah, I guess we are in now for a few good months in the mining stocks. Wouldn't be surprised if they catch up until, let's say, early next year, spring of next year. And you might see actually some violent moves. So the problem then is once the sector turns, it goes so fast that you run behind the train and the market doesn't give you any chance to get a good entry in form of a pullback or a dip, right? It's just continuously pushing forward. So that is probably right now the risk that I see in the mining stock sector. I think that it's time to get into the silver stocks for sure, because we talked about it already. Most likely, silver will see a violent move towards $50 within the next, let's say, 3 to 8 months. And if that happens, you will get a very nice leverage with your silver mining stocks, I think.
The Financial Landscape by Florian Grummes suggests an optimistic outlook for both markets and precious metals, with significant potential for gold and silver in the near future. As momentum builds in mining stocks, investors should stay vigilant to capitalize on these opportunities while navigating the inherent risk. What strategies can investors employ to manage risks when trading in a rapidly moving market? Share your thoughts in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.